Hello, everyone. Welcome to this special edition of The Final Bar. I'm your host for today, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny and beautiful Redmond, Washington. What we wanted to do here at the end of June, beginning of July, is really look at what has happened in the first half of 2023, but then focus as much as we can on what's coming next. So we're presenting between this video and an upcoming video, Top 10 stocks to watch in July of 2023. Now, I will be honest with you, actually really challenging to pick just 5 names because my friend Grayson Roze here at StockCharts.com is going to be counting down from 5 through 1. I'm going with 10 through 6. I'm going to get us started with the first 5 stocks, but just narrowing it down to 5 to 10 names for us to talk about was pretty challenging because I think we're sort of at a pivotal moment in market history, right? We've got all sorts of competing narratives. We have big picture thematic ideas. We have individual stocks and groups that have been on incredible runs. And there's no denying that at some point those runs will have to stop. And so, anticipating and predicting when the music is going to be over, when we need to make sure we have our chairs underneath our seats as investors, could be very important. And July could be the month when that really sort of comes to fruition. But for what it's worth, we're going to give you 10 stocks to watch here in July 2023. As I mentioned, I'm going to start with the 10 through 6. Grayson Roze will be upcoming next, talking about numbers 5 through 1. I would love to get started with my first pick number 10. And it's a name that's probably very familiar to all of us. It's Apple. Now, it's kind of a, trait. It's a little overplayed to be picking a name like Apple number 1, but I have to go there when I was thinking about how to set this stage of, what names to watch and what charts to watch. Whether or not I think this is a particularly good long idea, as it's, certainly overextended, as the market cap is $3 trillion plus, and we're debating how high these valuations can reasonably go. And I think we're well past the bounds of reason and now into some insane levels of traditional valuation metrics. But how far can a trend like Apple go? And when I think about what we've learned so far in the first half of the year, it's the dominance of the mega cap growth trade, right? It's the FANG stocks like Apple, like Amazon, like Meta, like Netflix, like Nvidia, certainly with semiconductors, have had incredibly strong runs. And those names are so big and so meaty and have such a weight in our major benchmarks and in ETFs like the XLK that understanding and getting these right is super important. And I know this from my time at a large investment firm. We would spend a lot of time just thinking about these mega cap big benchmark names, because if you were wrong on one of these, you would have such a hole to try to dig out of in terms of outperforming your benchmark, right? If you're running a fund benchmark to the S&P 500, you better get Apple right, you better get Meta right, you better get Amazon. These are huge names in your benchmark. You're wrong on 1 or 2 of those, and all of a sudden you can be right on 20 other stocks, and it's just not even going to help because there's such a significant weight. I would argue when you look at the trends, and just to orient you to what the charts are going to look like for my portion of the discussion here, on the right half, I have a weekly chart of Apple going back about 5-6 years. In the lower left, I have a daily chart, and I'll probably zoom in and out of these just to talk about some of the different time frames that are at work. And then in the upper left, I just have a candle chart because I found more often than not having a good read on an important candle pattern like a bearish engulfing pattern or a hammer candle or something like that just gives you a little bit of a heads up when there could be some short-term dislocation or short-term reversal in some of these charts. So when I'm looking at the chart of Apple, particularly on the daily chart, just look at the strength of the trend. And not just the strength of the trend, the consistency of this uptrend. This is a stock that's continued to push higher. Charles Dow's basic definition, higher highs and higher lows, just has continued to push further and further to the upside. At the time we're recording this here at the end of June, Apple is well above an ascending 50-day moving average, broke above its 200-day moving average in the end of January, beginning of February, retested it in March, and then it's been lights out to the upside. It's also above an ascending 13-day EMA, which is sort of one of my basic short-term gauges. Are we above or below that basic measure of short-term trend strength or weakness? So overall, I'm impressed by the pace of this trend. I'm impressed by the momentum, which I'll come back to in a minute. I'm especially impressed with the relative strength. Look how Apple was underperforming going into the end of the last year. If you may not remember, but the S&P bottomed in October and actually rallied in the fourth quarter. Apple was actually making a new low going into the beginning of this year. And then from there, it's been, as I mentioned, lights out to the upside. So strong relative strength, strong price trend. The reason, to be honest with you, beyond all of those things, why I think it's important to watch Apple is because it has not had a break. Now, the second chart that I'll show you here in a second, chart number 9, has had a break recently, and that's why I think it deserves a point on this list. Apple's on this list because it hasn't broken yet, and because it's had such a run, because the valuation has continued to increase to astronomical levels, because the momentum has remained strong, because the relative strength has remained consistent, I am certainly eagerly awaiting some sort of pullback. And I think the reality on a chart like this, is it possible that we just turn on a dime and go straight down, and all these people that are just tingling with FOMO this whole way higher, just waiting for a pullback? You're telling me when we get a good pullback that you won't have a bunch of people super excited to buy in on that weakness? I find that hard to believe. So I think July is going to be a key month for Apple, because I think that's when we most likely get a significant pullback. Whether that's a 5 to 10% move or what, I'm not sure. I would certainly be looking at the 50-day moving average, currently around 176. And assume that that would most likely hold. And I think a pullback to an ascending 50-day could be an incredibly powerful signal for a chart like Apple. Just to finish off the discussion of this first name, when you look at the weekly chart, even though the run has been incredibly strong here recently, look to the left and you'll see that it actually has been, 2022, obviously pretty painful, but a big basing pattern or a consolidation pattern. And now we're breaking out to the upside. So you think of this as a big run. Think of this as a bull flag on the weekly chart, which is a big year-long bull flag pattern. We've now broken above there. That measure, if you think we're overextended now, do the upside measurement based on that bull flag pattern. It goes way above current levels. I don't know if that's a reasonable upside target for a chart like Apple, but I do know it has had a relentless incline. It's continued to push higher, and at some point that music stops. I think July is when the music stops. My guess would be it is a brief stop before the music starts back up. Make sure you have a seat ready and make sure you ride out that decline. But I would imagine short-term weakness in a chart like Apple will bring an influx of excitement from buyers that missed out on this run and are excited to get in on a leading stock at a bit of a discount. So Apple is chart number 10 for me. I think this is a key one to watch. And I also think if you want to know what's happening with the NASDAQ 100, the Qs, the NASDAQ Composite, the S&P, understanding and really focusing on the chart of Apple and recognizing any sort of rotation would be key. I would also say a bearish momentum divergence could be a huge warning sign on a chart like Apple. Has not happened yet here at the end of June. So that's my first one. Chart number 10 is Apple. Chart number 2, and I did speak with Grayson Roze to know what names he's going to be talking about. I think we'll have 2 semiconductor stocks for you. We'll see. Grayson's going next, so he has the ability to change his picks based on what I did, but I think he'll probably stay true to it. And I'm pretty sure he has a semiconductor name in there. I'm going to pick AMD. The reason why I want to pick AMD as number 9 is because I think once you've looked at the chart of Apple, once you've really focused on the strength of that trend and how we're really pushing to new highs every month in 2023, AMD is a bit of a different look. If you look at the weekly chart, you can see that up until the end of 2021, of course, an incredibly strong chart. What's interesting about the chart of AMD is try to find the 2020 sell-off on this chart. It's there. It's just this little blip right here, right? If you look at the overall trend, AMD has been on an incredibly strong run for quite some time. That was actually just a little hiccup within that uptrend. Let me maximize the chart a little bit, and you can see what I mean. Then you can see at the end of 2021, AMD actually topped out in November and rotated lower. While Apple made a new low into the end of last year, AMD bottomed out in October, and that's where the major benchmarks did. And then it rotated higher. And just, looking at the classic trend analysis, right? Higher highs, higher lows until the end of 21, lower highs and lower lows in 2022 up until October. Then we put in a big time higher low. And I think that was a key signal at the beginning of this year, recognizing a potential rotation, which has now completed. At this point, AMD is in a pretty good uptrend, but we've seen a bit of a pullback here recently. Let's look at the daily chart. And you can see why that pullback has been so meaningful. While Apple was way up here above the 21-day EMA, Apple has actually broken down and just over the last couple weeks is testing an ascending 50-day moving average. I actually put a video on my YouTube channel called Market Misbehavior recently comparing Apple and AMD for this particular reason, because I think while Apple has shown a consistently strong trend, unabated, just continuing to go higher, AMD is a bit different. It's also showing a strong trend, but it's pulled back here recently. And I think pulling back to an ascending 50-day moving average is a classic sort of buy on the dips mentality. William O'Neill, who unfortunately passed away earlier this year after an incredibly successful career as an investor and really as an educator primarily, I would argue, talked about the importance of pulling back to a 10-week moving average. That was one of the basic premises of his trend following approach, which was, has stood the test of time through multiple different types of market environments. I would call this a fat pitch chart. We're here in baseball season, here getting into July, sort of right around the All-Star break, sort of in the meat of the season where teams are really starting to differentiate themselves. If you don't know what a fat pitch is, it's basically the pitcher leaves the ball hanging right over the plate. You have to take a swing at it. It's just such a good setup that regardless of what the count is, regardless of whether your team is up or down, regardless of whether there are runners on base, you have to take a swing because it's such a high percentage play, right? I mean, you likely can do something good with the ball and get the ball in play and advance the runners and get on base. So a fat pitch is a pitch you want to take a swing at because it's such a high probability setup. That's the setup I see in AMD. It's really tempting to buy strength, and I don't have a problem with buying strong charts as long as you have a good money management strategy. And I think, when I think of life as a trend follower, I think you have two different general ways you can do it. Buy really strong charts and just buy anywhere along the trend and have a good trend following tool, a good trailing stop to make sure you lock in gains and make sure that you are limited to downside if the trade moves against you, or you wait for actionable pullbacks, right? A more actionable entry point. Apple, at this point, arguably not actionable because it's continuing to go higher. There's no break in that trend. There's no short-term weakness where buyers that have missed out might come in. AMD is where you're actually seeing that. Now, the other thing I think that makes sense about AMD is the momentum characteristics. So AMD was overbought at the end of May. In June, sort of pulled back here to an ascending 50-day moving average. But look how the RSI is holding steady just above 40. As long as the 50-day moving average holds, as long as the RSI of 40 level holds, this is setting up as a pretty much textbook fat pitch chart, a textbook buyable pullback within an uptrend, sort of the buy the dips mentality. Those things break, I think you have to question the sustainability of the trend. But I'm impressed with AMD with this short-term pullback. Seems like it could be a more reasonable entry point, a more accessible entry point. And I think when you compare it to some of the other semiconductor stocks, like NVIDIA, that have had continued uptrends, continue to push higher, AMD may be a better setup compared to others in the group. So chart number 9 for me is AMD, also in the technology sector. From here, we'll go away from technology. Those are my two tech contributions, but I think that's a sector that it's certainly been one of the top sectors in 2023, and I still see a lot to like with some of the key charts in that sector. That brings me to my third pick, chart number 8, which is FDX. Talk about a change of picture from something like AMD and Apple to go into something like FedEx, kind of a delivery services stock. But bear with me. I think the industrial sector is super compelling here. Industrials in general have not been the best sector on a relative basis in 2023, but I'm starting to find more and more names that are doing particularly well. Other names that I thought about were trucking companies, something like ODFL, Old Dominion. I have another industrial stock a little later, which I'll share with you. And then FedEx is another one that came to mind. Now, FedEx is an interesting macro story. It's an interesting technical story as well. The macro story is this. I was taught there are certain key stocks that you want to do well. And I feel like in 2023, big semiconductor names are probably the modern version of what I'm about to tell you, right? There's a backbone to a normal functioning economy. And as long as those companies are doing well, conditions are probably pretty good. And when you think about 2023, it's the backbone of the internet. It's what is actually going to fuel development in AI and allow all of our devices to talk to us and talk to each other. And that's semiconductors. That's why something like AMD or NVIDIA or any of those names makes a ton of sense right now as a long-term play. Rewind 20, 30 so years, and the names that I think were those sorts of names were things like FedEx and UPS, right? Transportation stocks really goes back to Dow theory and Charles Dow's idea of looking at industrial companies, the companies making stuff, and railroads, the companies delivering that stuff out to consumers. And if those companies, the delivery companies in particular, were doing well, that means there's a lot of demand for goods. That means companies are producing things and they're being shipped out to distributors and directly to consumers. That is an economy that's actually doing particularly well. So I think with a chart like FedEx, you're really going back to what Charles Dow was implying, which is, are consumers buying things, and are they needing to ship stuff to themselves? And also, are businesses shipping things to each other? That's why FDX, I think, has often been an important chart to watch. When you look at the two of them, FDX a more compelling technical setup than UPS, although I think both of them would be very important charts to watch. And here's the reason, right? When you think about the Fed in 2023, and really 2022 into 2023, it was all about this rate hike cycle, right? A rising rate environment, which is an environment unlike any that I've certainly seen in 23 years of doing this, and others have to go way back earlier in their career to see other times when you had a consistently rising rate environment, really understand the ripple effects that that can have. I think a lot of investors in the present day are underprepared or certainly underexperienced in a rising rate environment. What you have to remember is what the Fed is trying to do by raising rates is to bring inflation down to more normal levels. They have that bogey around 2% that they're looking for, and we're still above that here in the middle of 2023. So their goal is to slow down the economy to bring inflation down. The economy has been overheated. The economy recovered very well out of the COVID crisis, arguably, and now they want to slow things down. So literally, the Federal Reserve is trying to make things less awesome economic-wise, is how I would generalize what they're trying to do. So what that would mean is a stock like FedEx most likely struggles, right? Industrial companies are going to struggle as economic conditions are slowing down. If we're in a recession, that's going to hit consumers. That means you're spending less. That means you need less stuff shipped to you. That means you're making less discretionary purchases and you're trying to hunker down, save money, and sort of weather this period of slower economic growth. The chart of FedEx, I would argue, is a great way. You can look at economic data, you can look at home sales, you can look at unemployment. I like looking at a chart like FedEx and just say, is a company that's designed to deliver stuff, do they still have a lot of demand for their services? What's happened in the last 6 to 8 months is the answer has been absolutely, there's plenty of demand. You can see on the weekly chart, FedEx actually topped out in mid-2021 and rolled over. Bottomed out in October of 2022, along with our major benchmarks, and then rotated higher and really started to rally from the fourth quarter of 2022, really through the end of June of 2023. We look at the daily chart and you can see how this uptrend is remarkably familiar. It actually looks a lot like the chart of AMD, a lot like the chart of Apple, this nice sort of slow and steady incline off of the October lows. This actually bottomed out at the end of September, looking at the daily chart here. Look at how the relative strength was incredibly strong in the fourth quarter of last year, first quarter of this year. Then things started to lighten up, and I think the reason why I see FedEx as an actionable idea here going into July is because we rallied really through the end of March, and then it was what's called a basing pattern. And a basing pattern for me is sort of, think of it as a rectangle you could draw on your chart, right? Really think about sort of a consistent high level. In this case, we had a bit of a lower low, but overall you can see that this was a rally phase and then a consolidation phase or a basing pattern. What that essentially means is the market now agrees that FedEx is worth around $230 a share, and now we're just kind of overshooting and undershooting that theoretical level, right? So think of the market, the rally in the fourth quarter of last year, the first quarter of this year, as we're undervalued and that the stock should be trading higher than it is. Then we have this sort of 3-month period where the market's kind of hitting equilibrium. Buyers and sellers are kind of in agreement. There's just little noisy movements, but overall, we have a general sense of what this stock is worth, and the market sort of recognizes that. Then something changes, and I like to talk about what we call a change of character, right? When the market is in a certain trajectory and then something's different. Something different happened here in the month of June, and you can see by the fact that we came off of the lower end of this range and then propelled back to the top. Look at the highs here, pretty consistently around 230, and you can see we've now broken above here over the last week or so and pushed above there. We're now above 3 upward sloping moving averages. This is a chart in a renewed uptrend. It's overbought right now, which could mean we get a bit of a short-term pullback, but overall, the longer-term trend on the weekly chart is certainly strong, and on the daily chart, that I see this as a potential resumption of that uptrend. So I would argue while many of us have been focused on the growthy sectors like technology, communication services, consumer discretionary, and rightfully so, because those have been some of the strongest charts around, Don't forget about a sector like industrials, which if you scan for stocks making new 3-month highs, charts like FedEx are going to pop up on your list. That's actually where I found this name, was on a regular weekly scan that I run on StockCharts, looking for stocks making 3-month highs, stocks making 3-month lows, and just seeing what comes out of it and digging into those charts manually. I would never blindly buy or sell any names on that list, but it shows me what charts I want to dig into a little further. So chart number 8 out of our top 10 charts to watch in July 2023, FedEx, FDX in the industrial sector. Bringing us to chart number 7, and this is an interesting one. This is a name that I picked because I was fairly certain that my friend Grayson Roze would not pick it, and I'm pretty sure that that's the case. It's a financial stock. So who would boldly or maybe stupidly pick a financial name during the middle of a difficult financial scenario where the Fed is hiking rates, the yield curve is inverted? Apparently me, because again, I'm not worried as much about those narratives. I'm looking at the chart, and I'm seeing the chart has something that we want to start to pay attention to. Now, if you look on the weekly chart that I'm showing you here, I'm using what's called the last trade line. This dotted horizontal line is a really cool feature that just shows you where is the current price, and it gives you a horizontal line looking left. This is a technique we used in the Fidelity chart room all the time because you'd always want to know where we're at relative to where we've been. That is, quick note, that is why the final bar, one of the main reasons why the final bar is called the final bar, because I would often tell people start at the final bar and look to the left and see where we're at relative to where we've been. That is one of my 101 how to look at charts a technique that I would teach a new analyst or a college student or a new investor using technical analysis. If you look to the left, you can see right now we're testing the upper end of this range for 2023. The ceiling for this stock in 2023 has been around 140, 145, and we're once again testing that level. I can't guarantee that JPM is going to break above this level of resistance, but it might, and that's why I think stocks like JPMorgan that have been so off investors' radar starting to work, I find really meaningful. In an environment like this, it's super easy to look at growth stocks, and I had a couple of them on my list, so I 100% get the idea of looking at leadership names in technology, communication services. But don't forget about some of those sectors that have not been doing well. Sectors like financials, like energy, like materials, like utilities, names and sectors that have been struggling on a relative basis because at some point, they will rotate higher. And if you ignore them, you will miss arguably the best part, which is when they really start to work. And if you can get in early, then you can ride that magnificent uptrend as the masses, as everyone else kind of realizes something new has started, you're kind of already in that name. That's why I think JPMorgan could be a compelling chart here. That's the weekly chart of JPMorgan. Let's look at the daily chart, and you can see how it's really, I think, demonstrating what I would probably call an inverted head and shoulders continuation pattern. Now, that is a lot to unpack, so let me tell you what I mean. An inverted head and shoulders, a regular head and shoulders would be a top, right, where you have a high surrounded by two lower highs. You flip that over, and that's an inverted head and shoulders. Now, this often happens at a low. You'll have a stock or an ETF that has a big downtrend. Then you'll have this low surrounded by higher lows, and it's a reversal pattern. You also will find it sometimes as a continuation pattern. What I mean is you have a rally, and then the basing pattern actually looks like an inverted head and shoulders. And I would say similar to the chart of FDX, I think you're seeing a bit of a basing pattern here, a consolidation pattern, settling in around 135 to 140. But if you look, we tested the 200-day moving average here in March and bounced off of it. We're now finding support at the 50-day moving average, and that's created this sort of complex right shoulder looking sort of thing. We have a very consistent resistance level right around 140 to 145, and that is right where we're at here at the end of June, beginning of July. Do we break above that level? And I think if we get above 145 on JPMorgan, that's the trigger that I would be looking for. The reason why this is, I think, deserves to be on the top 10 list. JPMorgan is not a stock that's going to appear on a lot of people's lists because the financial sector has been struggling, and overall, this is not a name that's been performing relatively well over the last 6 to 12 months. However, at some point that starts to change. At some point, this Fed rate hike cycle starts to evolve and financial stocks really start to benefit. We haven't seen that in a lot of financial names yet, in a lot of regional banks, but I think JPMorgan from a technical perspective is telling you may want to start to watch this. So I think JPMorgan breaking above 145, completing that inverted head and shoulders continuation pattern could be a really compelling idea, and that's why that's chart number 7 for me. That brings me to my last of the top 10 stocks to watch in July 2023. And chart number 6 is Southwest Airlines LUV. Now, airlines have actually had a really interesting run here. If you look at the charts of, Alaska, ALK, and others, these are names that have been beaten down for quite some time, but really starting to emerge. The whole travel tourism space has really started to shine, and you don't have to look any further than hotels. Cruise lines, I almost put something like Norwegian or Royal Caribbean or Carnival on the list, but they're super overextended. It's very Apple-like, but even more overbought. They've had these crazy runs, and I think they might be due for a bit of a pullback. So what other names are sort of in that space that would benefit from if travel and tourism really thrives in the summer? And despite a rising rate environment, people are still willing to spend money to go travel around the U.S. and elsewhere. That's why I think Southwest Airlines could be a compelling idea here. Again, that's the sort of macro argument. Let's look at the technical argument in particular. I'll start with the weekly chart. And the reason why I want to throw this in here, this is an unusual pick for me because I'm a trend follower. So I am looking for established uptrends. That's why the chart of AMD, I call it a fat pitch chart. That's kind of my ideal chart. If I could find a bunch of AMDs on any given day, I'd probably be pretty happy about having ideas that I could pull the trigger on in any given moment. Something like Southwest is a little different. I thought it'd be a different look than some of the other charts that we're showing here out of our top 10. And I think the reason why it's compelling is because it certainly is giving the sign that it's rotating from a position of weakness to a position of strength. This is the weekly chart, so you can see the rally off of the 2020 low to make a new high in April of 2021. From there, really rotating lower. And while the S&P, the NASDAQ, made new highs going into the fourth quarter of 2021, Southwest Airlines was actually struggling. 2022, it continued to go down and hung in there with the market okay, but still going down on an absolute basis. Retested these lows from 2020. Didn't quite get down to the 2020 low, but sort of tested where we were at around that bottoming period in the first half of 2020. Sort of got back down to those levels just below $30 a share, and now starting to rotate higher. It's back above its 200-day moving average, or the 40-week moving average, as you see on this chart, for the first time really since the beginning of 2021. We briefly went above it a couple times, but I think this could be the beginning of something a little different. Let's look at the daily chart, and you can see how this rotation, I think, can be so powerful. Here's the 200-day moving average, kind of in this maroon purplish color. Look at how often we spent, or how most of the time we spent below the 200-day. We had a number of times where we attempted to get above and failed. A couple times where we had these little blow-off moves above, and they were immediately repelled. My question going into July, is this time different? I think it might be. This is a stock that struggled to regain its 200-day, now appears to be doing so. And I love the fact that it broke above, pulled back, and now is rotating higher. At this point, it's above an ascending 13-day EMA. The 50-day moving average, has been turning higher. The 200-day moving average in red, maybe just starting to hook higher, and I think that might be something to watch. The relative strength is what's so important to me. Up through the end of May, chronic underperformer, and that changed in June as you saw the relative strength line really start to turn higher. So this represents a sector, I think, that has been underappreciated, the industrial sector, even though earlier in 2023, I think there have been a lot of interesting ideas that have come out of this sector. If you scan for stocks making new swing highs, I found a number of them in the industrial sector in the last month or two. But with Southwest Airlines in particular, this is a stock that has been in such a consistent downtrend. I think we might be at a change of character type of moment. And I'm always interested to see sectors and groups that have not been working that now are starting to work, because that initial move is sort of that disbelief. A lot of people are still not, pun intended, buying into the rally in a chart like Southwest. The question marks that I would have on this idea in July are a couple things. Number one, do we hold the 200-day moving average? I think that's the most important one, because we've had problems previously where it's gone above the 200-day briefly for less than a week and have pulled back down. For now, we've sort of passed that initial litmus test in that it stayed above there. My question is, can it hold the 200-day, particularly on any sort of pullback? I think pulling back to the 200-day would be totally reasonable. Breaking the 200-day, I think that invalidates the value of this particular idea, because it's going to tell you that this rally phase might have been short-lived. The other thing would be a pullback and making sure we put in higher lows. As I've mentioned many times, Charles Dow's theory 101 is an uptrend is a pattern of higher highs and higher lows. That's what I'd be looking for with the chart of Southwest. If we get that inevitable pullback, do we hold key levels of support? That's it. Those are my first five, I guess, numbers 10 through 6 of our top 10 stocks to watch in 2023. As a reminder, I started out in the technology sector with Apple. This has been a strong performer, continues to show strength. I don't see any signs of that strength abating. At some point it's going to, and that's why I think it's arguably the most important chart to watch. Look for signs of a change of character in Apple, and you have a good heads up that that mega cap growth trade may stop working. But for now, I'm inclined to follow trends and just use money management techniques to move up your stop. Looking at a trailing stop, the chandelier exit, some way of locking in those additional gains if we continue to go higher. Pick number 9, I stayed in the technology sector and went with AMD. I think we have 2 semiconductor names out of our top 10. I think that's reasonable given the fact that it's been a leading group, so pivotal to the economic growth in the U.S. and globally here in 2023. AMD has pulled back to an actionable level, pulling back to an ascending 50-day moving average. That could be an important idea. Chart number 8, I went way off into the industrial sector and looked at FedEx. I think that's a great sort of overall investment story, right? Companies that deliver things to you are a great way of measuring economic strength, of measuring really the growth of the consumer and their willingness to spend money. I think strength in FedEx tells you that economic conditions are not getting too bad. I think things are holding in there okay. I think FedEx breaking out of a base could be a compelling idea. The 7th pick is an interesting one, JPMorgan. I think it's a tough call on financials, but the charts don't care whether you think a call is tough or not. The charts are going to tell you. The price is going to tell you if it's working. I think JPMorgan with that potential inverted head and shoulders continuation pattern. If that's not one you've heard of, now you've heard of it. Look at the chart of JPMorgan. It's a great example. Remember, breaking up through that neckline is what's so crucial on that particular idea. Finally, Southwest Airlines, ticker LUV, back in the industrial sector. It's an airline stock. Airlines, travel and tourism has been a great theme here in recent months, showing you that people are traveling and they're willing to spend money, even though the Fed is continuing to raise rates and make some of that spending a little more expensive. I think an airline like LUV has potential upside to be had, and I think that's an important one to watch. So that's it for now. Those were my picks 10 through 6. Don't forget to tune into part 2 with Grayson Roze at StockCharts. He will share with you picks 5 through 1. Altogether, you have the top 10 stocks to watch in July of 2023. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good one.